Hello, my name is Hesbon Nyakundi. Welcome to another edition of my chat with a bank CEO. Today, our host is Mr. Raphael Lekolool, who is the CEO of Postbank. Mr. Lekolool has had a career spanning more than 2 decades in banking and insurance. He has served in different capacities both in the private and public service. Prior to assuming the role of Managing Director at Postbank, he was the chairperson of the Risk and Audit Committee and Ethics Anti-Corruption Commission. He has also served as the chair of the Interim Management Committee Board of the Agriculture Food Authority between 2016 and 2017. Today, Mr. Lekolool will be discussing strategies of building savings for business. This focus comes, in the wake of the call to increase the savings culture in the economy for both personal and enterprise growth. If you're joining us on Zoom, please use the chat box to share your questions on today's topic. You can also follow us across social media platforms under the hashtag CEO chat or my chat with a bank CEO. At this point, I would like to welcome Mr. Lekolool to speak to us on today's topic. Karibu, Bwana Lekolool.
Thank you, Hesbon, and thank you for being here with us at Postbank. It's a great pleasure for us to host this chat, and as Postbank family, we welcome all who are listening in to us, and we hope we'll be able to do justice in terms of talking about savings and how one can use savings to improve their businesses. Thank you, Hesbon.
Thank you. So now I think you can maybe give us an overview of today's topic, give us some context on where we are in terms of savings, because I know Postbank is really heavy in terms of championing for a savings culture in the economy.
Thank you. Hesbon, as you look at the mandate that Postbank was set up, Postbank was set up as a government bank to assist in calculating a savings culture in Kenya. So we are not far off the mark when you're talking about savings wherein in Postbank. One of the key things we do at Postbank is to come up with products which will assist people to save. And when you look at the culture that's going to be set up in terms of savings, then Postbank comes into mind in terms of in calculating that culture right from a young age. So we do a lot of trainings to young people, to old people, to ensure that they can get into this savings culture. When you look at savings as a way of mobilizing, in terms of today's topic, mobilizing funds to establish a business or to boost your business, savings comes top of mind. Although when you look at Kenya currently, a lot of people have been concentrating on the credit side. So you'll find a lot of talk on credit. So when you look at ways of funding a business, one of the key ways, apart from savings, people talk about is getting a grant, a donation from your family, or getting some capital injected into that business. But most people really rarely think about what impact would have been in their business if they had savings to hold on to establish or to boost up their businesses. So a lot of people look at funding that has no strings attached. I remember listening to the president the other day when he talked about that the Hustler Fund will not be for free. It's because the notion usually is people look at Serikali's idea, Serikali's idea, and once they're given the money, they do not have an intention of repaying it back. But when you have a savings and you're putting your savings in that business, then you have a stake in that business and you'll take care of that business much more than if you're just going to get a grant. So as a strategy of boosting your business, savings is quite critical, and adapting that culture is quite critical. When you look at Kenya, we've been faring very badly, as you've rightly put it. When you look at some of the articles that have been put out there, we are one of the poorest in East Africa when you analyze our culture in terms of savings. So when you project that to the business, it follows that definitely people are not saving to boost their businesses. So there is usually a very big gap in terms of where money is going to be got or where funding is going to be got to fund those businesses. So with Kenya, we are roughly at around 12% in terms of GDP, gross savings rate, and like other African countries who are on average at 17. So you can see even just on the global average in Africa, we are lagging behind by over 5 percentage points. So when looked at that in that context, why do we then need to talk about savings? It's because of what we see happening in the whole world. We are struggling as a nation. When you look at our neighbors, they're well over 20% in terms of their savings rate. Why should we be lagging behind while we consider our economy a much bigger economy? So there is a lot of work to be done in terms of addressing this gap. This stagnation is a result of many things that are happening. Why we struggle is because of the way we've been set up, both the policy level, also as financial institutions. And that's why when you look at Postbank, we have been set up to ensure that we address that gap, especially in terms of offering that financial literacy education.
So you think you've painted a picture there in terms of the savings culture in the East African region. You've said you're not doing very well compared to our peers in the East African region. What, in your view, do you think can be credited for this situation?
I think one of the key things is that lack of that discipline. We note ourselves, and we always trick ourselves that into believing that we'll start saving more once we settle that loan that we have here, that debt that is preventing us in our minds from saving. We believe a huge chunk of starting that journey, we need to get rid of some of the loans. That should not be the case. Another thing is people wait for a pay rise at work or have an improved performance in their businesses so that they can start saving. You are looking into entering new markets, and then you say, once I conquer this new market or I increase my sales, then I'll be able to set aside a little bit of what I get that extra. Another one is people are waiting to get that job. That job may not be coming. While you're earning money on your side hustles, you need to even think of saving that little that you're earning on your side hustles. Others look at, say, let me first of all finalize with some of the other commitments. I need to pay my HELB loan, I need to get myself off CRB, I need to sort my parents, I need to sort my friends before I start saving. That should not be the case. It should be noted that you can never have enough money to start saving. No matter how hard we try, we will never have enough to save. It's a very difficult thing to do, so you need that discipline. So building a solid savings habit goes hand in hand with developing a savings culture. It doesn't matter how much one makes, you need to train yourself in it. You need to discipline yourself, and I'll keep repeating that aspect of disciplining oneself to save something for each day. From the factors I've outlined above, you'll find that it looks like a challenge, but if you're a boda rider, somebody who is out there in the market, a mama mboga who is out there in the market, you can do a daily savings program. You can say, out of what I'm earning per day, when you remove the money that is there for capital, for working capital needs, if you make 50 bob or 200 shillings a day, you can set aside 20% of that. So you can easily save 50 shillings per day if you're engaged in that business. For those who are salaried, you can take the monthly route. You can decide an average of 20% of my salary will go into savings. So you put in instruments, and when you look at various banks, they have standing orders, and most institutions also allow for check-off systems on their payslip. We've had very good experience in that regard. As Postbank, we've come up with a Save As You Earn product where a customer or a client who wants to save a certain amount of money each month gives instructions to the employer, and the employer remits monthly to us at Postbank. And this account is usually contractual, and it can be used to save. So when you look at a person like that who's going to discipline themselves, it makes sure that each month, before the money even hits the account, they've already saved. So if they pay themselves first, be it a salaried person or that person who is doing business, if they discipline themselves to save first before engaging in any other form of consuming the money that they get, then they will have gotten themselves into that savings habit. Then over time, these savings will increase, and you'll find yourself usually, the initial bit will be a bit difficult, letting go the 20%. But after some time, if it's deducted at source, you'll get into that comfortable zone where you're able to live within your means. So you asked, why are Kenyans saving less? We find that as part of the things that I've already outlined, Kenyans are saving less because they feel they have a commitment. You know, the African culture, you need to take care of your families. If I get a job, it's not just Raphael who has a job, it's the whole village that has a job. And I need to up my socks in terms of supporting not just my immediate family, but also the extended family. And it can also extend to the clan. And you'll find that people pride themselves when they get a job, then they end up educating. And you'll find many stories of people who will talk about having been educated, even when you're listening to the vetting that was being done. You'll find a lot of people talking about how they've been assisted by their brothers, or how they're assisting their brothers and sisters out there. And it's a common theme that cuts across us as a country. So once we do that, then we are left with very little to save. So one of the key things that we need to do as Kenyans is to prioritize savings. We should not stop prioritizing savings. We need to prioritize it. It needs to be top of mind. When you look at the current debate that's ongoing, and the need to bring the digital lenders on board in terms of regulation and how they're going to operate and licensing, you'll not find a lot of talk on savings. But on credit, because that's where we are really playing at, we find a lot of talk. There's a lot of communication around it. There's a lot of consumer protection aspects on it. People should not be overcharged. And when you look at some of the digital lenders, they charge up to 200%, or if it's a 10% per month, it's 120 when you look at it over the years. So it needs to change. That conversation needs to change. Instead of just talking about credit and how people are getting losing money in terms of the interest payments they make, then you need to change that conversation so that people are able to save and interest so that they can plow it back into their business. That conversation, I think this is the right time to start it. As we appreciate our SMEs as drivers of growth, we realize that most of the people who are out there in that business are having challenges in terms of formalizing their business. So you'll find that, yes, they're engaged in day-to-day business, but the bookkeeping, the record keeping is not very, very good. So for a fact, they cannot tell you how much they make, but they roughly know what is wrong, what's happening. They're very good at that business, but they've not really formalized it. So if you tell them how much are you really able to save, they're not able to tell you. So a lot of education needs to go in terms of educating them and also offering them solutions. You'll find very simple solutions being offered by the technology fintechs, which will help them track their day-to-day expenditures. When you look at your M-Pesa now currently, you can easily track how much you're spending. And basically, if you are in that formal engagement, you're able to track. And if that money was in a bank, it will be also easy to track how much you're removing, how much you're spending, what are you spending it on. So if you're going to spend using the mobile phone, you're able to track it. If you're using your cards, then you're easy to track your expenditures and say, these ones I can cut off. And this cuts both the business people and also individuals. So that ability to have formal records is quite critical, so that you can able to say, this is what I can do, this is what I'm able to save. And with that, you should be able to build up reserves which will be able to cushion oneself against those hard times. That financial access, the access to literacy training, especially on financial matters, is quite critical. We at Postbank, we really strive on that. We go out of our way, not just to train the people in schools, but also the newly employed. You'll find us organizing seminars and workshops just to talk about savings as an alternative way of building one's capital, whether they intend to go into business, but also just to meet their daily goals or their monthly goals or yearly goals. We go out there and do that critical aspect of training, which is really lacking. And it's good that we have this chat, because it pricks our minds on what we can do better in terms of addressing the literacy gap, especially the financial literacy gap, which we can do best if we have a very formal program. Another key thing in Kenya people talk about is the low income levels. The majority of Kenyans are struggling getting just food on the table. So they're always complaining that inflation has eaten onto their disposable income. So what can we do? What can we tell them? Yes, definitely the pay is not going up. Inflation will be there. But if you want to get into business and you want to build into that business capital, then you need to start saving, because it's a much better way than borrowing. Because once you save enough, you'll be at peace in terms of the interest payments that you'll not be having to make. So if you plan and project well, and that's where this financial planning comes in at handy. If you plan well and say, this is a goal I want to do, then I should be able to save and get there. Kenyans also, when I look generally, we are a consumer society. When you look at the amount of digital loans that are out there, most of it is small amounts, and I can bet you a lot of it goes into consumerism. We're looking at some of the figures that Kenyans use to bet. They borrow at times to even just engage in betting. The figures are very huge. It's astronomical. And when you look at that, if Kenyans were saving that kind of money, we would be very far. And that's something that needs to be told out there. So we're talking earlier about consumerism and how malls have mushroomed all over the place. So they've made it very easy for you to go and spend. It's really, the allure is there, the goods are there to buy, and you'll find people borrowing just to go and spend, even if it's just to go out, to be seen hanging out in the malls, especially the young people. That culture needs to change. They need to be able to save so that they can go enjoy that life. So something needs to be done in terms of that education, so that people think of savings as something that will make their future a much better future. One of the key things, as I talked about, to overcome those challenges is to discipline yourself, get into that habit, save, and make sure that you don't have the habit of going back and removing it from where that money is. That and the support that we get from our families and friends, we just don't need to support them in giving them money. You also need to support them in terms of educating them. As you give them money, don't give them a handout. Go out there, tell them, yes, I'm giving you this money. What do you intend to do with it? You just want to buy food? That's different. But if you want to invest in something much more worthwhile, then you can take them through, because they've taken the chance of educating you, they've taken the chance of taking you to school so that you can get a better job. So as you are repaying them, not just in terms of funding, you should also repay them in terms of kind, in terms of sitting down with them, training, go back to schools, talk to them about savings. So for those who are in the banking fraternity, it's quite important. I think we should not take it for granted that everyone has a good view of the financial literacy that we think they have, but we should take the knowledge that we have as bankers to go out there and tell people, yes, you can also save as part of your roadmap to capitalizing your business. Another key thing is the challenges we face. We have ease and access to the funds that we save. It's become quite easy when you have the mobile phone. You're out there having fun, and you're short of 1,000 to 3,000. You can easily use the phone to remove the money from that account. If you want to get that discipline, disconnect all that. If you have a savings account and you're using it as a savings, do not mix it with these other monies. If the other money is for entertainment, for expenditure is finished, think twice before removing money from your savings account. Just make it a bit hard. And once you make it hard so that you cannot easily access those funds, then you'll have a much better roadmap to achieving your savings goal. So a lot of people think they will just put the same monies together, but when they hit the road somewhere, somebody asks for some money, or you want to pay for something, then it's easy to dip into your savings. And dipping into that savings is just you using your card or using your phone, and then suddenly what you've saved over 3, 4, 5 months just suddenly disappears. So make it hard, make it painful to remove that money, make it challenging, so that if it's savings, and you'll be able to reap the fruits as as you go along. Yes, I've talked about high cost of living. We've seen food prices go up, but when they start going down, where will you put that money? We've been promised, yes, it's going to come and food prices will go lower. So yes, you're spending today in terms of your normal day-to-day activities. So when those basic commodities go down, what will you do with that extra savings? Because it's a saving. You're buying unga at 220, now you're buying it at 180. You have 40 shillings. You're going to take it elsewhere. That's the tendency of a majority of Kenyans. Instead of taking it and saving it, they look for something else to spend on. There's a lot of things to spend money on. So do not create new avenues of consuming that money. Always think, I've saved this much. Today, I didn't have lunch. Do I need to spend it later in the evening or the next day? Just save that money. You're able to say, okay, today the company gave us a program where maybe they're going to do subsidy for food, for staff canteen. What am I doing in terms of putting that money aside? So it starts with you as a person, and if you're going to build it as a business also, yes, you're making this money here, you've stopped spending it here. Do you have something dedicated where you can put that money in? So as I'm trying to say is, it's a daily activity. It's not really a one-off thing. It's something that you need to build up, be conscious about it, have some little appreciation of what you can do, because I think there's a lack of appreciation in terms of people appreciating what they're able to do. They would rather blame something else. But in terms of actually starting that journey, a lot comes from one's discipline and setting up their priorities. So that's it. If one needs to start that journey in terms of savings, that's really a good roadmap.
Okay.
Yeah.
So we've seen one question here from Kirut. It's called Kirutit Rono, who's asking, how best can I embark on my savings journey? how best can he wants to know how best
Yeah.
he can start, his savings journey.
Okay.
Yeah.
Savings journey are usually quite personal, but one of the key things is one needs to set up a goal. Why am I saving? You need to understand, why am I saving? Am I saving for my future? Am I saving to buy a car? Am I saving to buy that car plot? Am I saving for a holiday? Once you understand that goal that you want to set and you know how much it's going to cost, then it's easy to start on that journey. The next point will be review the income levels that you have. Yes, I want to buy this car. I'm earning 50,000, but I'm looking to buy a very big premium which costs 1.8. That one you will save for many, many years. Just be realistic in terms of goal setting. Yes, I want to buy this car. It will cost me around 400,000. This is what I'm able to do. And then start that journey by telling myself or telling yourself, I will start saving 10,000 because this is what I'm going to save on. Out of this 10,000, instead of using Uber to travel home, I'll start using a matatu or a boda. That 200-300 shillings that you save, put it there. I'll start saying, instead of eating at this fancy, nice hotel where I'll be seen by my friends and peers, I'll go down to that small kibanda and eat a chapati na madodo. I'll save. And once I save, I'll be able to achieve my goal. So those goals setting is quite critical. And then map out that journey. Understand, where am I saving? The other key thing is choose a product that will enable you to save. Half the time you think giving friends money as an investment will work out. I can tell you for free, Esbon, out of the 10 people that you lend, even on industry average, is around non-performing is usually around 30%. So for individual where there's no collateral to hold on to something that they'll be able to pay you back is very, very, you can't really enforce that lending. So giving to friends as a form of savings is not an option. You need to put this money somewhere where it's going to earn you interest. So quite key is choose a product that will be able to grow that savings. Look for a product that will not have monthly charges. Look for a product that if there are taxes to be levied, then it will be minimal impact on your amounts that you're saving. And then put it in such a way that you are not able to access it. So it's a journey. It's a whole journey from goal setting to prioritizing to disciplining oneself and making sure that that goal, you're able to achieve that goal as you go along. It's not a one-day thing. It's a journey, and people need to appreciate. At times it will be difficult, it will be painful, but staying true to the course will enable them achieve their goal.
Okay.
That's the message I would give it to them.
Emma is asking, I think she's trying to inquire about, does one stand to benefit from building savings in a bank? Will they make some money out of savings in terms of, raising profit by just building a savings account in a bank? So that's what she was trying to inquire about, whether that is possible. Because I remember earlier you were talking about encouraging savings as opposed to credit. But then maybe the other addition to this question will be, does savings enhance somebody's ability to access credit?
Thank you, Esbon, and thank you, Emma, for this critical question. Yes, savings can be used to enhance one's ability to grow their income. A simple arithmetic is if I'm projecting to start a business in the next 2 years, and I set a goal of saving, let's say 10,000 each month. So if I do 10,000 times 12, I'll be at 120, times 3 years, I'll be at 360. That is before the compounding of the interest that is going to be achieved there. I'll be starting at 360. If I'm to borrow to start that business, I'll start by paying interest on this 360. And if I'm to borrow like from the digital lenders, who would basically be the ones to lend to people without collateral, or this easy money that one is able to get, you'll be looking at paying an interest of 20 to 120% per month, 20 per month to 120 per year. So you're better off building that savings. It's a painful journey, yes, I understand, but it's much more painful when you're paying this kind of interest instead of saving to build that capital to start that business. So for Emma, that dilemma should not really be there. With good education and being made to understand the impact of what these figures mean to the pocket is quite critical. And that's why banks, and even us as Postbank, we try to give this alternative way of raising that capital. When you talk to customers and to our customers out there, we tell them about the ease at which they can go about doing that savings program so that they're able to achieve their goal of building a nest to do their business. So it's a much easier and much less painful journey. And usually when you borrow, you also run the risk, if that business is not doing well, you can easily run away. But you see, when you have invested money and put it in that business, you really struggle to find a solution for that business to work, because it's your money at stake, and the passion and commitment you'll have to that business, if the money comes from you, it's much more, it will be much more evident. I know long time banks used to really insist on asking, what's your stake in this business? I'm going to lend you, yes, $1 million, but you need to come up with something to inject in that business. It's not that I can just give you that 1 million. There used to be that insistence so that they see the commitment that comes in. And you see that commitment will come in because you'll have saved, you'll have denied yourself something so that you're able to put in this capital and you have trust in this business. It's basically a tick in terms of you saying my business will prosper once I get these funds in.
Thank you. So we have another question from Hilary. He has a long question. I think it is in 3 parts. He's asking, you have said that you do trainings on financial literacy. How can one get, how can one be part of those financial literacy trainings? Then the second part of the question is on, do you have incentives to encourage savings or build a savings habit? Then the last part is on, suppose the pay rise or someone doesn't finalize the other commitments. Suppose the pay rises, yeah? That's what it means. Or someone doesn't finalize the other commitments that is preventing him from saving. What can you do to continue that journey of saving?
Okay. For us to be part of a journey, we have very dedicated staff at Postbank, and we have over 97 branches outside, spread all over the country. So if you can get in touch with any of the staff in those branches, they'll be able to be taken through the one-on-one on savings. So the trainings are there. We normally also organize for group trainings. We have very good training programs we had with the youth. If you come to the National Youth Service, we normally engage them. Once they are employed and the training comes, we normally have a very long and nice chat with them on financial literacy training. We also have access to the discipline forces. We normally, because they're much more organized, you'll find them better organized because they'll be in groups being trained, so they'll give you a chance to go talk to them because they understand and they appreciate the role of savings. Instead of just going out there to look for credit to do something, they also appreciate that you may not really have the time during employment to do much, but that's the time to save when you're still able to and you're still energetic. So we normally have those organized trainings. So if there's a group or chama that is out there, we are available and you create time. Our staff usually get engaged with groups, business groups out there, and they go talk to them about savings. because it's quite critical. A lot of the information that's available to traders and small SMEs is more on how to borrow. There is very little or scanty information on how to save. So we try to manage that gap, and we go out of our way to offer that training. So if they are organized as groups or as chamas, we are able to go there and talk to them, take them through the savings journey, take them through financial literacy training, and we also give them the pros and cons of savings vis-a-vis borrowing to enhance their business or to grow their businesses. He's talked about pay rises and not having finalized their commitments. I think this one is where discipline comes to address this issue. You may not get a pay rise, but as you continue paying for maybe the help loan, it keeps going down. It's not remaining static. So at one point in time, it's going to end. If you're not prepared to do on when it ends these commitments, then you'll find yourself with money that will have to find a home. Where is this home? Where will this money be? Which home will it be? If you come to Postbank, we're able to give you a structured product. And when you look at the way we've been structured and the government incentives that we have as Postbank, for savings account, the interest that we pay is not subjected to withholding tax. So that's one of the incentives the government has given, so that it encourages a savings culture. So if you save in Postbank, the interest you earn, if it's 1%, it's 1%. If it's 10%, it's 10%. There is no withholding tax that's going to be deducted. And that incentive, you really appreciate the government for that big step, because it shows you the value that it places in terms of savings. So that encouragement is quite critical for us. And that journey, as I said, needs to start now. As you have all these commitments that are going to be finalized with, the loan maybe you have is 100,000 spread over a year. So at the end of the year, what are you planning to do with the money? If there's no plan, then make sure that what you are paying off for these loans is taken straight to a savings plan, because you're already living without that money anyway. If I'm paying a loan of 100,000, I'm already living without that money. So this 10,000, once it becomes available in a year, what will I do? I need to know in 2 months, 3 months, I'll put it in Postbank as a save as you earn account, and then each month I'll be deducted until I decide what I need to do as my part of the next goal. And that journey can be discussed with the branch manager or with the staff at any of our branches.
Right, thank you. We have another question here from Collins. I think Collins is alluding to inclusion, financial inclusion for the youth. And his question is on what efforts are being made to promote inclusion for the youth. And he's alluding to the aspect of the importance of inculcating these skills, or the importance of saving at an early age. Why do you think that is important?
Okay. When you look at the developed communities, you go to Japan, which has one of the best savings cultures. You go to Singapore. It's a culture that's really been bred, and people grow up knowing that savings is not an option. It is there. It's part of your life. For us as a country, what are we doing to educate these young people in schools? We go out of our way as Postbank. We go to schools. We train the young in schools on what it means to save. We know for a fact, most of us Kenyans, because of the way we've been brought up, a lot of our parents, or this generation of parents, are very overly protective of their young, and they don't want them to lack for anything. But we are not bringing them upright. We need to tell them that they need to deny themselves something. That addiction to go out there to spend on sweets, to spend on chocolates, to spend on happy times, needs to be curbed. It needs to be moderated. And unless we come up and agree as a society that we need to come up with an aspect of training and telling people that there's much more to do with the money rather than going out there to spend, that consumerism needs to really be checked. So what I'm trying to say is, from a young age, if you have these small piggy banks, if you have those two small teams, encourage the children to save. At the end of the day, they realize by the time they've grown up, they'll have saved so much in their little piggy banks. And this can be translated even if it's a digital account. Kindly encourage them to save, not to get into this expenditure spree. Because as a child, most of the things that you need to have are usually provided for. So the little pocket money that you're given, if you save half of it, you will get into that habit of saving. So we do that training, we go out of their way. We make it easy to open those accounts. The KYC is light, and we do not really discriminate in terms of account opening. We're able to open accounts and agree the goals with that person, what they need to do. If it's a student, yes, you're saving. What are you saving for? You want to save to go for a trip in Mombasa or something, then you walk that journey and give you a good account that will be able to enable you achieve that goal that you're planning to achieve.
Yeah. We have another question here from Glado. She's asking, what should I do to save more for my business?
Okay, I touched a bit on this, Glado, when I started talking about understanding your business. It's quite critical that you really come to terms with the business that you are running. Get to know the expenses that you have, get to understand what really eats your money, try and cut them off, and then that journey becomes much easier if you have a formal way of really going through your business records. Understand, this is what I'm buying, this is what I'm using it for, this is what I'm left with, and then say, what can I afford to save? If I'm being left at the end of the day, depending on the business that you do, if I'm being left with 1,000 bob or 200 shillings, how much do I want to eat? How much do I want to spend? Usually the rule of the thumb is 50% should go into your rent and the very basic needs, and the 20% is supposed to be savings. The 30 now is what you can play around with, so entertainment, things that you need to do. But if you're able to say structurally, out of these 100 shillings I make, I'll save 20 shillings, and just extrapolate it to what amounts that you have, then I can assure you, Glado, that if she starts that journey, first of understanding her business, how much she can set aside, and then dedicating 20% of that money that she's able to save, and she puts it in a bank account, she'll have started a very nice journey in her life. And the fruits will be seen in the future, depending on what she wanted to achieve.
Thank you for that response. We have another question here from Margaret Mateka. She asks, other than save as you earn, what other options would you advise are suitable for a casual laborer who would have a daily or weekly take home?
Thank you, Margaret. I think it's quite critical when you look at the options one has. Yes, I've talked about the save as you earn, which is pegged to your earnings, but I'm looking at somebody who's out there in the market, somebody who's out there driving an Uber, a taxi, or a boda boda, and money keeps flowing in at different intervals. At the end of the day, if they're able to say, I can save 20% of what I've collected, no matter the amount, there are various options that are there. When you look at a bank like Postbank, we have over 700 agents out there. These agents are there in mashinani. We call them mashinani agents. They are there with you. Before you close the day, just walk to that agent, deposit the money. We have over 97 branches. If I've decided that I'll save this 20%, as you pay the other monies for the day, bank everything. But as you're in the bank, put that 20 shillings, that 20% aside, and put it in a savings account. So if you walk that journey on a day-to-day basis, then you should be able to do that. Another key thing is the digital platforms that are available. You can easily do the star, if it's Postbank, 200, 999, put your account number, put 50 shillings, put 20 shillings. It's all, you're still able to deposit up to 50 shillings per day. So do not shy away. Do not think the amount is small. You can imagine on a day-to-day basis, you're saving 100 shillings. At the end of the month, you'll have 3,000. At the end of the year, you'll have 36,000. That's before the interest that's going to be applied into that account. So that journey, that discipline needs to start so that at the end of the year, when you're looking at your account, you'll have seen how it has grown up because of the injections that you do on a day-to-day basis. So take advantage of the products that are available, take advantage of the digital platforms, take advantage of proximity to the agents to be able to deposit those funds into those accounts. You should not have an excuse that I'll go sleep with the money that I have. And if you're able to deposit that money, you also make sure that nobody else is able to steal it from you. You know, most people, if you are having cash, it can get off from your pocket in different ways. You can decide to stop and say hello to friends, and at the end of the day, that money will be gone. You can be walking and then you drop it, or somebody takes it away from you. But if you have deposited it, it's very hard for somebody to come for it because it will be lying somewhere safe, earning interest for you. And that's why it's very critical for somebody to operate a bank account. I'm not just saying in Postbank, but in a nearest bank near you, where you stay, where you live, or where you're performing your business. Let it be very convenient. It's very, very convenient now to deposit funds in accounts.
We have another contribution here from Kibet. He says, contrary to conventional belief, even poor and vulnerable youth can accumulate savings and assets when the right tools and interventions are available. So which are some of these interventions do you think should be put in place to encourage vulnerable youth to accumulate savings?
Okay. I know the vulnerable youth, usually when I look at the youth, they have this, what we call YOLO mentality. You only live once. You know, the aspect of enjoying today while not really forgetting, knowing there's a tomorrow which you will still suffer for, is quite critical. So for those who are in that journey in life, you're feeling vulnerable, you're feeling like you do not have enough. If you sit down at the end of the day, if I am somebody doing day-to-day jobs, I can easily say, out of the 300 shillings, let's say I'm employed as a farm worker somewhere on a casual basis, I earn 300 shillings. I'll program myself in such a way that if I'm to buy food, I'll buy food in such a way that I'm able to get the economies of scale, so that if I'm going to that mjengo, the cost of food that I will be able to spend would be roughly 20%. So out of the 300 shillings, I'll be looking at spending not more than 60 shillings. If I have to go to that place of work, if it's an alternative to work, it'll be much easier. So wake up earlier, walk. At the end of the day, when you look at that money that you're trying to save, the 300 shillings that you're being paid, you'll realize that you'll be able to save up to 100 shillings of that 300. Not just the 60 shillings. It can even go up to 100 shillings. And couple that with the products that we have, And I'm very happy that the government, listening to the President, His Excellency the President, the other day when he was talking about how they are going to empower the hustlers. If they save, they'll get an additional, I think it was 3 to 1. Whatever it is that you're able to get on top of what you're saving is a very, very good plan. So if that person walks that journey and they're able to commit themselves and say, out of these 300 shillings that I get every day, if I commit to save 100 shillings every day, it will go a long way in terms of building and really motivating them, because as the savings grow and you look at the balances, you'll get really motivated and it will encourage you to save even more. You'll find somebody who starts that journey with 50 shillings. Next time they'll be saving 100. Next thing they'll be saving 200 shillings, because they'll find a way of cutting down on costs. What we fail mostly is we do not look at the big picture. We sort of do hand to mouth. We don't sit down and say, okay, out of this 1,000 shillings that I'm getting, how will I structure my life? Is there something that I do not need to buy, which I buy? Cut it off. Is there something that I can do different to save me money? Do it. If it's something that I say I'm not going to use an Uber, I can use a matatu, use it. If not a matatu, use a boda. Cut down on those costs, those day-to-day costs. And when you do that, it becomes a habit. And once it becomes a habit and you discipline yourself, you realize how easily it is to grow your savings, irrespective of what position you are in society. Do not say I'm earning very little. That's not an excuse. There is never enough. In my opening statement, I say there is never enough money. You will not have enough. So unless you discipline yourself and say, I'm going to cut off 1, 2, 3. If it is schools, take children to school where they can easily walk, where they can easily access. Do not go out of your way to pay extra for transport, for taking them to school, and you'll end up saying, okay, I've taken my children to school, but I pay so much in transport costs. It negates. So yes, this is something that the government needs to do to bring those services closer to the people, so that you don't have to go far for your education, you don't have to go far for your health needs. Another key thing that people forget is paying for NHIF, because you're saving. This saving needs to be available to you. It doesn't need to be paying for your medical. So as you save, kindly also pay for these other insurances to cover yourself. It makes a big difference, because if those elements are removed off your mind, your medical costs, your education costs, if they're removed off your mind, then you should be able to pay into your savings account much more, because you know that you're not going to spend this money bailing out somebody because they didn't have a medical cover somewhere else. So it's a journey, and I said you just have to look at yourself 360. What can I do to save myself? If I want to save myself off medical costs, then there's this insurance I need to take. Pick one that is structured and fits your lifestyle and pick it. If you feel you can do an NHIF and another one, please do, because at the end of the day, you don't want going back too deep into your savings to cover for those emergency costs, which you should have been able to cover using your insurance.
Okay, so we have an interesting perspective here from somebody calling himself Mzee wa Mutaa. He's citing some statistics from the Kenya National Bureau of Statistics, which says indicates that 80% of the country's population lack a savings plan. What, in your view, or what steps should individuals and even businesses do to set about their savings plan rolling?
Okay. Mzee wa Mutaa has really hit it home. We feel, and that's the obligation we have in Postbank, in calculating a savings culture. It goes a long way. We need a lot of support, not just from the government, but also from banks and financial institutions. If you look at credit, the way it's been sold in Kenya, the ease of accessibility, the way we go about looking at credit, we look at the digital platforms that are there. It's been made quite easy. In fact, what we are fighting about is asking the government for people not to be blacklisted, you know. But that conversation is not there in the savings space. There is a lot of work to be done. The government needs to come out very strongly, and we are very happy that these conversations on savings is really top of mind for the government. And you can see the general talk now on savings. It's really igniting, and we need to take this a step further. For us as Postbank, it's a journey that we've been walking all the years that we've been in operation. Postbank, as you know, has been around for over 120 years. We've been a savings bank. It's what we do best. It's what we train people about. But we need to come out very strongly. We have plans as an institution to come out very strongly in terms of literacy training on savings. But we need to complement this. It's a complementary role we'll do. Other banks need to join in on this journey so that we can spread this gospel. So we don't just have savings, we just savings and loans. When you look at most of the institutions outside there, they usually target both. There's a lot of drive on savings and loans. But in Kenya, we seem to really forget the savings bit. We really concentrate on loans. We need to come up with a strategy as a country, as banks, on how we can go out there and do massive education. When you have this opportunity in schools, what are we telling our children in terms of financial literacy training? We need to have a very good curricula. If it can be put as part of the curricula so that we have a subject on savings, it can be informal or formal, but it has to be there where our children are taken through savings, I can call it a savings crash course every year, so that they understand what it is to save and the practicality on it. I remember when you were young, we used to have this 4K club where we used to go and learn how to plant cabbages. We'd be given a small plot, plant sukuma wiki, cabbages, and we'd in turn sell it to the schools or take it to the market. If you have such a plan also on savings, make it practical. Yes, you've been given 100 shillings in school as your pocket money. Are you just going to spend it on bread? Or are you going to say, okay, I'll deny myself today, and then I save so that I can have much more bread later in life? So if we embark on that journey as a country, this country will go very far. And as I said, it's reflected in the rates that I mentioned. We are lagging way behind most countries, and we need to really step up in that regard.
Thank you very much, sir. See, we're coming about time. It's almost actually 11. And I'd like to request you now to make a closing statement, very briefly on the importance of saving. And you can take to a question here by Collins, who is asking, why should Kenyans even save? Does saving have an effect on the economy and our dependence on debt?
As I said in my opening statement, yes, we need to save. Why do we need to save? As a country, there is a benefit, not just to the individual, but also to the country. A savings culture will encourage citizens to save. Once they save, this money can be utilized for development, infrastructure development. You can see for our country, we rely a lot on foreign aid and foreign debt to do our infrastructure. If we were able to source this money locally, you can imagine the benefits it will be to the country. First of all, the interest being paid to our own citizens, because when you take a debt, you have to pay interest. This interest is paid, and if it's a debt from China, from US, from Britain, from Japan, that interest goes in terms of supporting the economies, because they are the ones who raise the money. So as you pay, you're paying somebody else there. So if you are to pay interest and you're paying it locally, then it's the citizens who will be enjoying that benefits. Another key thing is you get into exchange losses. When you look at, let's say, 2, 3, 4 years ago, the debt that we borrowed in USD, if you were to translate it into Kenya shillings, maybe then it was 100 shillings to the USD. Now it's 120 to the USD. There's already an exchange loss. The interest still remains the 3, 4, 5%, but there's already an exchange loss. So you'll end up paying much more. You'll have to get much more resources to pay off the same debt, same amount, but in terms of local currency, it will be much higher. So it benefits a lot for a country to get and grow its savings, because that is what's going to be used to develop the country. And also, as you develop the infrastructure of the country, you get this other benefit that people are able to get very good returns on the investments they have, because the government will be paying them. So nationally, yes, we have a very big way to go, so that we encourage our people to save so that it can be used for national development. And when you look at the mandate of Postbank, that's how it was set up. Get people to save for national development. It's a very key mandate. We just need to extend it now to make it much bigger. So for me, last words is savings is a journey. It's a journey. It's a journey of commitment. It's a journey of pain. It's a journey that one needs to undertake to achieve the goals that they need to achieve. And that journey is not easy. It can be painful. It can be less painful. Let's look for these areas where we feel we can cut off our expenditure so that you can be able to save. Saving is a continuous journey from when you are born to when you die. Even the people who are in pensions, they still need to save because they still have tomorrow to live for. Let's not forget that if I'm able today to work, I need to save so that when I'm unable to work in those later years, I still have something to hold on to. And that can only be savings. Let's not just think of today. Let's think of today and tomorrow. So that today I do what I can, save for a better tomorrow. And that's why when you look at our motto, my bank, my choice, my future. I'm banking today. It's my bank, it's Postbank. My choice is to save. It's a choice I'm making, and I want to walk that journey so that my future, I'll be able to get some return in the future when I need it. And those things are quite critical for us here at Postbank, and those are the same values that should really cut across the country so that people are able to save for the future.
Thank you very much, Mr. Raphael Lekolool, for really exploring extensively our topic today. I would like to take this opportunity to thank you very much and the Postbank team for hosting this CEO chat session. For now, I'd like to thank all the participants for joining us for this chat today. I'd like to encourage you to keep the discussion going online, send all the questions you have on this topic, and we'll be happy to forward them to Mr. Lekolool to respond. Thank you very much and have a good day.